Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 25th, 2025, and we're diving into the latest earnings report from Dick's Sporting Goods. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Dick's Sporting Goods has just released their third quarter results, and there's a lot to unpack, especially with their recent acquisition of Foot Locker.
Revenue and profitability overview. Let's start with the top line. Dick's Sporting Goods reported net sales of $4.17 billion for the third quarter, with a comparable sales growth of 5.7%. John, how does this compare to market expectations?
Well, the company has certainly exceeded expectations. Analysts were forecasting an EPS of $2.70, and Dick's delivered an adjusted EPS of $2.78. This is a testament to their strong operational performance and effective sales strategies.
That's impressive. What factors contributed to this growth?
The growth was driven by increases in both average ticket and transactions, as well as the successful integration of new store formats like the House of Sport and Field House locations.
Strategic initiatives and acquisition impact. John, Dick's has recently completed the acquisition of Foot Locker. How is this expected to impact their business?
This acquisition is a bold move, positioning Dick's as a global leader in the sports retail industry. They've opened 19 new stores this quarter, which includes both House of Sport and Field House locations. However, they anticipate future pre-tax charges of $500 to $750 million as they integrate Foot Locker and optimize their assets.
What are the potential benefits of this acquisition?
By acquiring Foot Locker, Dick's expands its reach and creates a global platform that intersects sport and culture. This strategic move is expected to drive long-term growth and profitability.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Dick's has reported gross margin expansion. How significant is this?
It's quite significant. The gross margin expansion indicates that Dick's is effectively managing its cost structure, which is crucial for maintaining profitability amidst competitive pressures.
And looking ahead, what is the company's outlook for the rest of the fiscal year?
Dick's has raised its full-year 2025 EPS guidance to a range of $14.25 to $14.55 and increased its comparable sales growth guidance to 3.5% to 4.0%. This reflects their confidence in continued strong performance.
CEO and CFO statements. John, what are the key messages from the company's leadership regarding these results?
Ed Stack, the executive chairman, expressed excitement about the Foot Locker acquisition, highlighting it as a transformative step. Lauren Hobart, the CEO, emphasized the effectiveness of their long-term strategies and the strong execution by their team, which are driving outstanding results.
It sounds like the leadership is very optimistic about the future.
Absolutely. They've assembled a world-class management team and are taking decisive actions to ensure profitable growth moving forward.
Key takeaways. In summary, Dick's Sporting Goods has delivered a strong third quarter, exceeding EPS expectations and successfully completing the Foot Locker acquisition. With raised guidance for the full year, the company is well positioned for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Dick's impressive performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Dick's Sporting Goods performance in the comments below.